So, hello everyone. I hope you all are doing well. Welcome to the fourth lecture of our journey. So, in this lecture, we will discuss about the candlestick study, and let's start. So, basically, this will help you to understand why I told you guys and why I told you for a professional setting you need to set your trading view chart from line to candle, and I hope you all have done that. So basically, this candle here is a bullish candle, and let me write it down as well. So basically, this is a bullish candle I presented here. So basically, the candle, in order to understand candle, we need to understand what it represents. So basically, a candle represents the human psyche, or the psyche of the market, or the psyche of the buyers and sellers active in the market. So basically, this region here is the opening region. And these two straight line, which I've indicated using high and low, is basically these are called the wicks. So, or even at some places, it also called as shadows. So basically, these wicks represent the lowest price that it went and the highest price that it touched. So basically, for example, if we have opened this candle in a 4-hour chart, currently we are using a 4 chart. So each candle represents a 4 hour. So basically, during that 4 hour, how much the candle has went high. So this is basically the highest point, which we could say that maybe it is 63,000, around 63,000, and the lowest candle went is around 44,000. Like this is just an imaginary example, so please don't freak out. So yeah, so this is basically the example, and this area here represents the opening area. So as as the 4 hours completed, for example, from 12 p.m. till 4 p.m., as this 4 hour cycle completed, then as soon as the 4 p.m. gets hit, the old candle is being closed and the new candle is started. For example, if the candle started from here, it went to the lowest point till here and it maximum went here. However, what defines it as a bullish candle is that it has closed above the opening point. For example, it has opened here around 49 or 50,000 and it has closed here around 57,000. So this defines the the opening and closing, and this ultimately led us to decide which type of candle is this. So this means this is the bullish candle. And another important area which we need to consider is that this this area within the candle represent, which is basically known as body, represents the volume or the volume being traded in that certain time period. For example, if a chart is set for 4 hour, then this area represents the volume being traded in the 4 hour. So, for example, if we want to see how how a bearish candle would look like. So basically, if you want to understand the psyche shows us that who were most, either the bulls were active during this phase or the bears were active. So as this candle is a bullish candle, it shows us that the bulls were more active than the bears, and so they kept on getting their funds inside the market, and the prices surged. So basically, the candle represents the tug of war or the competition between the bulls and the bears. And if we want to see the contradictory candle, which is the bearish candle, if you want to see the bearish candle, there would be only be a one difference. First of all, I would need to change the color so it would demonstrate you better. Yeah. So basically, if you want to show the bearish candle, everything would be same, but it would now the closing would be below the opening point. So if it opened like at 57,000, around 57,000, now it is closing around 49,773, which means that the candle is bearish and the bears are more active in the market. So let's look at some of the examples in the current market. So if we see here, if we see, for example, if we see this candle. So this candle, in this candle, basically, we can see we can see that that the closing of the previous candle was the opening of this new candle, and as it has closed above this opening candle, it we can call this a bullish candle. And the maximum it went was this price, and the lowest it went was this price. Now I hope you all understand this concept of candle, and now we can discuss why we choose the candlestick pattern in this chart. This is because it all because the line chart fails to show us where exactly the price went at the maximum. It only shows us the closing value. So on this closing value only, where it is pretty much difficult to conduct technical analysis. So for the technical analysis and for it to be accurate, we need this candle. So in the next lecture, we will discuss about how different types of candles can indicate us about what the next market move could be. So stay tuned and I'll meet you in the next lecture. Hello everyone, I hope you all are doing well. In this lecture, we will discuss different types of candlesticks and how the shape of the candlestick would help us to predict how the price would move in the market. So basically, before that, I would like to caution you all that only on the basis of one indicator or only on the basis of one indication, we cannot take a trade. We need at least two, three, or four indicators that support us to take a trade. So now moving on, the first candle we would discuss is Dragonfly Doji. Now, Dragonfly Doji is a type of candle which has this long wick and only a pretty slim body. Means it has a very small volume being traded. So now understanding candlestick in terms of bulls versus bear, we can see that the bears were so active as it opened here. Well, the opening and the closing point is to somewhat similar stage. So what we need to know, what we see is that the bears were so active that it took the price from the opening point to a really low point. However, at this point, for example, 44,146, the bears get exhausted. As soon as the bears get exhausted, the bulls took over and they took the price again to where it started. So now, according to the bears versus bulls, we can predict from this that now, as and this candle would generally took place when there's a downtrend. So as there was a downtrend and then this type of candle occurred. So it would indicate us that then there will be a trend reversal and then the prices would go up. Similarly, if this candle occurred in an inverse manner, we can call that the gravestone doji. And in that, we can see that bulls were active starting and they took the price aggressively higher. But as soon as they get exhausted, the bears took over. And now we can predict that from here, the bears would take the charge and the price would move down. So let's try this on a live chart and see how we can see that happening. So we would need to search a little to see where that could be happening. So remember, Dragonfly Doji is always where there's a really little volume being traded. Yeah, so I finally found one where this principle can be seen clearly, and that is where we can see the prices would move down. So here it is. Here is this candle with perfectly depicts the Dragonfly Doji, and we can see the prices were moving up, 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 and as soon as this candle formed, the prices started going down, 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 and it went till here. We can also call this the gravestone doji, but it had some kind of volume. So basically, you understood. I hope you understood that for a dragonfly doji to happen, we would need a pretty much slim body, a pretty much slim body. And now, while looking at it rhetorically, it might be difficult to find one, but but during the live trading, you can easily find one. Like here it is. We can say that as the dragonfly doji as well. So yeah, this could be this could be taken as a dragonfly doji. On to the another type of candle, that is inverted hammer. Inverted hammer or hammer is a similar type, like these both are the contradictory opposite of each other, but these are similar to much extent to dragonfly doji. And whenever this kind of candlestick pattern occurred, we can see a trend reversal. So this is basically a hammer, and the inverse of it would be the inverted hammer. So yeah, hammer also works in a similar fashion to dragonfly doji, and so it also indicates us about a pattern reversal. And on the live chart, we could easily see that where when the hammer is taking place. So if you could see that when the hammer is taking place, for example, um, if the hammer is taking place, we could see a potential trend. For example, here, yeah. So basically, rhetorically, it is quite hard to find, but yeah, you can find them, and you can see that the was in a downtrend, but as soon as hammer occurred, there was a confirmation. This hammer occurred. There was a confirmation that it would move up, and in a similar way here as well, we can see here as well that hammer is taking place, and there's a price reversal. And so there can be many examples where we can see that a hammer, yeah, here as well. So basically, whenever there is a hammer or inverted hammer, it would indicate us that there can be a price. For example, the price are moving up, but as soon as hammer occurred, the price were going down. So yeah, this can be understood. The hammer could be understood in a much more way that whenever it take place, there would be a trend reversal. From Dragonfly Doji, Gravestone Doji, Hammer, and Inverted Hammer, we can have multiple candlestick which would indicate as something. So the first on that list is basically three white soldier. Now, if I search here and if I could show you three white soldiers is basically three white soldiers is basically any of the three consecutive bullish candles being forming. Now remember that whenever we see candlestick study, whenever we study candles, we need to be sure that we are studying in a higher time frame. If we are taking a trade which is potentially would last for weeks or months, so basically we would need to be sure that we are taking that conducting those analysis at a higher time frame. Why is that so? Because the higher the time frame, the much more we would the much accurate would be the candlestick, and the much more accurately it will help us to predict. So if we see that how three white soldiers would take place, yeah, so it is pretty recent example that, for example, yeah, from here, if we can see, yeah, from here, yeah, just wait a sec. Yeah, from here, if there were three white crows, meaning three bullish candles, and then it indicated us that the price would move above. So then first there was a downtrend, and then there was an uptrend. I am actually trying to find a much more Yeah, you can see here as well. So there were so yeah, here as well there were three white crows and the price moved up in an uptrend. So basically, three white soldiers is basically which indicates us that the market is now quite bullish, and it would mean that now that it would be moving up on the price would be moving up. For example, if we could see here as well, yeah, this is also happening here as well. There were three white soldiers, and then the price moved from here till here. So we can see that there can be a potential uptrend. Now, contradictory, if we can see, so there is basically uh, three three black crows. So what three black crows is? Yeah, three black crows is basically the opposite of three white soldiers. It means that when there are three consecutive red candles or bearish candles, we could see a potential downtrend. So basically, this is the 4-hour chart, and as we move to the higher time frames, we would see it more accurately, and we could see how it is more accurately done. So here as well, we can see on a 4-hour chart that three black rows were taking place, and so the price was continuously moving in a downtrend. So now the final and the most important one is the engulfing pattern. Now, if I search here and show you how the engulfing pattern occurs, so basically the pattern occurs when the bearish candle, when the bearish, for example, if there's a when the pattern would indicate us about a potential bullish move is when there's a bearish candle and then the bullish candle is quite large in its size and in its volume, and basically it engulfs that bearish candle. It would mean that now we would now be moving in we would now see a bullish cycle. So if we could see from here, um, yeah, so basically, if you could see this pattern as well, so this basically represents how all the prices were at 32, and then this engulfed it, and now it is moving upwards in an upward trend. Similarly, in the contradictory manner, they could see we could also see a bearish engulfing pattern. Yeah. So if I would be able to find one, that would be much more helpful. I'm trying to actually find one because rhetorically it is pretty much difficult. Yeah, I found one. Yeah, if you look here as well, that this bearish candle engulfed this candle, and then as we can see, we then later move in a downtrend. And another bullish. If you want to see another bullish one, you can see it right here. This one. So basically, this is the bearish candle and this is the bullish candle. And then we can see as soon as this happened, the price is moving in an upward trend. So basically, these were the candlestick studies pattern, and there are numerous types of patterns, and there are numerous types of studies. The patterns which you can easily find anywhere, and which basically involves the demand and supply law, and it would show us that how a particular shape of candle would indicate as where the market would move. And the main ones, the important ones, I already highlighted. However, there are numerous ones, and if you want to check this out, you can easily find them on the internet. Thank you for listening, and we will meet in the next video.